Omnia was founded in 1953 in Sasolburg and focuses on fertilizers, explosives and chemicals for the agriculture, mining and industrial sectors. In 2003, they acquired SA's largest distributor of chemicals called Protea Chemicals. Omnia has a market cap of 8.9 billion rand, a price to earnings ratio of 13.6 and a dividend yield of 2%. And their results came out yesterday. They were smoking hot, were they not?
Very good. Look, they've got the same broad mix. They're in explosives, although I understand they're somehow more on the open cast side of things. They built that new nitric acid plant down in the Sasolburg area, which apparently is an extension and an expansion and a new reinvention of their previous plants, but it gives them a much better margin because the production costs are lower. So they're very excited about that. As a matter of interest, they raised about 1 billion rand at 50 rand a share, somewhere around there, 2010, 2011, in order to fund the plant. But those shareholders are obviously very happy now because the share price is right up at around 130, 140. But we know they're doing well in that and agriculture as well, because they're a major player in fertilizers, and we know that with the failed Northern European and US crops, a lot of the farmers here have been going bosses and just planting even the back garden, and so they need as much fertilizer as they can put their hands on.
At 130 rand, now this must be an all-time high on Omnia. What do we do with it from an investment case perspective?
Well, I mean, if we take Omnia, and I mean, we must really give Rod Humphries and the management team full marks for what they've done. If you look at where it was 10 years ago, it was a 500 million rand market cap company. It's now closer to 9 billion. So I mean, they've only raised 1 billion in equity in that period. So I mean, really a fantastic management team, really done well. As Paul was saying, they're more in the open cast mining, so that's hasn't been affected as badly by the strikes. And what I quite liked in their mining explosive business is they had a 20% volume increase in the last 6 months, and that's mainly come from outside of South Africa, West Africa, all these new mines that are going up. So Omnia still has a lot of things going for it. We can still see a lot of positive things coming in the mining division. You look at the agriculture, it's still doing very well.
So should we be buying it at 130 rand, to go back to my original question?
Well, I mean, it's done incredibly well. I mean, I think it will earn 13 rand this year. So I mean, it's on a PE of 10. The nitric acid plant is only at a 62% capacity utilization, so there's still a bit more. Look, I don't think you're going to get the same kind of meteoric rise, but I do still think there's some more to go.
Paul, at 130 rand, your views?
Yeah, I think so. Look, we were wondering whether it ought not to be sort of a lock-in now, because that thing about the crop having been bad, that sort of thing comes and goes, and then everybody plants, and then it rains, and then the price goes down, so on and so forth. But I think that critical argument about the new plant coming through and the margin improvements, that hasn't really been apparent in these earnings yet. This is more just a sort of a natural advance. So from what I'm being told by people who follow it closely, there's still potential for upside here. Very nice medium cap type stock which institutions are picking up on. And then there's that whole 7 billion people have to be fed, need lots of fertilizer story that knocks around. So yeah, I'm still hot on this one.
Are you hot? Hot or not on Omnia? Jonathan?
I'm also still hot.